We talk about splitting our positions, making sure that we've got that right entry. When we're in a pullback like this and we're waiting for a break, that's the biggest confirmation for me that the bulls have regained momentum and my strategy can come into play and I can start taking trades either on the break or on the pullback, depending what the risk management tells us. So I've said along 26 cents is what I want on Jasmy. I've had a big buy up here around the 27-cent level. You can see these buy candles here. You've had 1, 2, 3, 4 strong bullish buy candles at 27 cents. That's telling us that the buy orders are in the buy order book. That's a good position. Now, how do we know that the trend is going to break before the trend breaks? I've got two leading indicators that's going to give us a high probability that Jasmy is going to break trend before it actually does. Jasmy is trading just under 3 cents at the moment, so just under 3 cents. And what we're going to do before we look at these two indicators that's going to give us a lead as to when Jasmy is going to break. I'm going to talk about buying and selling pressure. If this is something that you already know, I'm going to teach you at Suck Eggs, guys, because people are asking me in the comments to go through this. So I want to make sure that everybody knows and everybody understands so they can follow it going forward. So simple as, what do we do? In a bullish trend, we're creating higher highs, higher lows. Those are the higher lows, those are the higher highs. In a bearish trend, we're creating the opposite. So we're creating lower lows, lower highs, and lower lows. So we know that the sellers are selling at the lower high. We know that there's a sell wall at the lower high, and we can identify that the trend is in a pullback. So that's exactly what's happening here on Jasmy. So what we're going to do is we're going to follow the trend down. We're going to identify areas of sell pressure on this downtrend. There's the lower high, bam. Trend line created, lower low, lower high, and we're waiting for a pullback into this golden zone, the 61.8 retracement. This is my magic level. I'm waiting to dip my toe in the water with 25% of my capital of this trade at this 26-cent level. I'm going to protect myself underneath this previous low. Why is this going to be significant for me? Because we were in this range here. Let's measure it. We were in this range for 86 days. The bigger the base, the higher the space, guys. So we broke out of that with some velocity, and I need this to hold as support going forward. So that's why this is going to be a strong protection point. If I'm wrong and we pull back into this trend, I want to be wrong with the least amount of capital risked. That's why I'm only putting 25% of this actual trade in at 26 cents. And that means that if we lose and start going lower, I'm stopped out with the minimal amount of capital. But more importantly, I've got more dry powder on the side to be able to accumulate at lower prices and better my entry. So it's not about just losing a little bit here. You can get a killer entry down here if the trend reversed, but trend's your friend till the bend at the end. The trend is holding at the moment, and I'm waiting for a break of trend for confirmation that the bulls have regained momentum. So we talk about sell walls. There's a sell wall that's indicated by a big wick, which has put the high in at 0.044885, and then the extreme, that was the extreme high. The close of the day was all the way back down here at 0.040611. So you can tell that there's a big sell wall there. You can tell it's a sell wall here. This is where the trend started. That's where we can add in our trend line. It's had 2 touches, and then you can tell there's a sell wall there. So we know that the sell walls, all we're doing now is identifying where we need price to pull back to. That's my 26-cent level. And then we're going to add in 2 indicators, and these are going to be the 2 indicators that's going to tell us, or they're going to lead us, they're going to be leading indicators to let us know when the trend is likely to break. So let's tidy this up, get that off there. We know exactly where we need price to come back to, 26 cent. So the first thing that we're going to look at is this, the CCI sniper. Once price, it's a simple one, guys. This is bullish, this is bearish. Once price starts crossing over into bullish, that's showing us that the bulls have got momentum on their side. So we can use this as a leading indicator. We can use this if this starts turning green before this breaks trend. That's showing us that we're likely to get a bullish move to the upside. So go back in time and watch what happens. When it's green, we're bullish. When it's red, we're pulling back. Simple, guys. So use this in conjunction with our RSI. You know what I like to use the RSI for is divergences, but you can also use it to identify, firstly, are we bullish or are we bearish? This 50% level tells a big story. If you're above the 50% level, you tend to be trading bullish. If you're below the 50% level, you tend to be trading bearish. If you're above the 70 level, you're in an extreme overbought position. If you're below the 30 level, you're in an extreme oversold position. Use those as simple, guys. Now, the next thing that we're going to use is this. We want a break into the 50% level, and we want to hold this moving average as support. So as this moving average comes across like this, we want to break the moving average and we want to hold that as support above this 50% level to give us additional confirmation that this trend is actually going to break before it actually does break. So we've got a couple of leading indicators there, guys. Once we've got an RSI break into the 50% level and above the RSI moving average, and this CCI sniper comes green, as this is pulling back here, as price is pulling back here, hopefully into our 618 golden zone, and this pulls into green, that's giving us additional confirmation that we're going to get the break before the break even happens. So if you did find it useful, guys, don't forget to subscribe to the channel. Let me know what you want me to comment next. Let me know what you want me to cover next, should I say, and I'll see you in the next one.